off, let's connect with Mr. Ashok Khurana, DG with Association of Power Producers, and on how the new FSA will change life for the entire power sector. Ashok, good morning. Thank you for joining us. Let me start with something which is of immense market curiosity. How soon do you think power producers will be able to sign on the dotted line, and when do you think FSAs will be finally, finally signed?
So we welcome this step of government. This will actually end the log jam which was bogging down the sector since 2009. Now, as we understand from the ministers and the secretary's statements in the media, we should be able to sign FSAs in a very short time. Only thing is, now the Coal India board will take a final call on the penalty clause, or the quantum of penalty to be given if CIL fails to maintain its assurance of 80% of fuel supply. And I expect all this should get over in next about 8 to 10 days. And this will bring about a great predictability and certainty in the fuel supply issues, and the generators would be able to plan the generation program and fulfill their obligations in the PPAs.
Right, sir, just one clarification. Whether or not, this directive which has been issued by the President to Coal India also ensures, or rather enforces, I should say, an 80% fuel guarantee in the FSAs.
Yes, that was the Prime Minister's instructions, which was then followed up by the presidential decree. So my idea is you must see the background in which these has been issued. In fact, this decree and the directions have been compelled by the Coal India's own operation. Since 2009, the entire fuel supply arrangement has worked on a completely ad hoc basis. See, coal sector and the power sector, they both are subject to regulatory regime, and they got to work in sync. In power sector, we commit prices for 25 years and a binding agreement. Now, we cannot have an ad hoc arrangement of coal supplies where there is no assurance of fuel supply, and Coal India works at supply at will. Since 2009, the entire sector has been working on that ad hoc arrangement. Nowhere in the world has done that. Coal India was actually abusing its monopoly and not adhering to the policy framework. Whether it is any sector in the country, they have to adhere to the policy framework. And the NCDP clearly lays down, it makes mandatory on Coal India to meet the normative requirement of the power sector. In fact, the PMO wanted 100% assurance, but looking at the domestic supply position, Ministry of Coal prevailed upon 80%. Now, that actually dilutes the mandate of Coal India, but we are happy with it. At least we know that now we'll get 80% of the LOA quantity, and then the generators can plan for the balance. Now, you must understand that 80% of fuel supply will only meet about 70% of PLF requirement. And in the regulatory regime that power sector works, we have to have 85% of availability factor to get our fixed charges. After this directive also, the private developers would need to arrange at least coal for meeting that requirement, either from the open market, e-auction, or from import.
Right. So, Mr. Khurana, now that power sector has got assured fuel supply at a fixed rate, if Government of India tomorrow decides to cap merchant power prices, I'm sure you will have no objections to that?
My idea is, if you see the regime, all people who are getting coal from Coal India cannot use this coal for merchant power supply. It's clearly mentioned, second condition is the PPAs. So all power producers who will enjoy this coal linkage will supply under the competitive bid program. Merchant plants will not be given this supply. That's been very clear from the point of view of the PMO, and they laid this condition that your coal supply will be proportional to the PPAs you have signed.
Let's take up the issue forward for Coal India and what really the signing of the FSAs means for the power pack as well as Coal India individually as well. Harshvardhan Dole, analyst who tracks the power space, institutional equities at IIFL, joins in on the show. Harshvardhan, hi, thanks for taking time out and joining in. Now, after the government has asked Coal India to sign coal supply agreements with private power producers, with some riders, what is your first sense of this event and how Coal India will absorb all of this?
Well, firstly, this is a great initiative taken by the ministry, or rather the government, to ensure that the capacity which has been commissioned or is on the verge of commission starts getting fuel on a predictable basis. Because so far the coal supplies were on a completely ad hoc basis, and ad hoc supplies don't lead to any predictability in cash flows. So a proper FSAs will certainly help most of the utilities to get in predictability in cash flows, provided they sign PPAs for bulk of the power. So I think it's a great initiative for the entire sector. Now, specifically, if I were to look at the impact on individual companies, then I think the companies that have commissioned, their large part of capacities in last 2.5 years, those include Lanco, NTPC, to an extent smaller companies like KSK, mid companies like Adani and so on and so forth. These companies should certainly benefit. The impact on Coal India to me would largely depend on what is the penalty trigger that the board would actually decide, and lot depends on how they ramp up their production capacity over the next couple of years.
So Harshvardhan, give us some numbers that how will life change for JSW Energy, how will life change for Indiabulls Powers, how will life change for Adani Power in terms of EPS? Are you looking at upgrading your price targets also for some of these companies?
Frankly, JSW Energy is completely insulated from the signing of FSAs because a large part of their capacity is operational on imported coal, for which they have signed a short-term PPA with respective state electricity boards. So actually they remain more or less insulated. Life certainly changes for someone like an Adani, because most of the earnings estimates on the street assume that large part of their coal comes from imported basis, and if that is replaced by a good amount of domestic coal which is coming at a substantial lower prices, then yes, certainly there is a possibility of an earnings upgrade. We are actually awaiting for details as to what is the actual FSA quantity that the individual companies would get, and what is the penalty trigger, after which we'll certainly look forward to upgrade our earnings estimate as well as the price target for these individual companies.
So Harshvardhan, let's quickly have your ratings as well in the entire power space. Which stocks are you bullish on, or rather names you're bullish on at the current levels, as well as, would it be private power producers versus PSUs that you'd prefer?
Well, certainly the risk reward within the sector has changed over the last couple of months. But one should also note that these stocks have seen a massive re-rating, and one should also keep in mind that signing of FSAs will certainly improve the outlook on these companies, but to a large extent it is already priced in. So from here on, the things to be noted is which companies will actually rapidly scale up their capacities, so that 2 years down the line you have a massive delta in terms of their cash flow stroke earnings. In terms of our ratings, we continue to be positive on Tata Power, because I think that is one company which has got its revenue model correct, and if one is willing to hold the stock for next 12 months or so, I think the stock will give you returns which are far more than the market. So in the private space, we continue to like Tata Power. The second name that we certainly prefer among the mid caps is someone like a PTC, because not only the FSAs but the recent tariff increases which have happened, and we've recently given out in a detailed note as to how PTC will benefit. I think over the next 12 months, that is one mid cap that one should certainly have in portfolio, because I think that the stock will certainly give you returns which are far more than the markets. On the PSU side, we continue to like Power Grid and NTPC. Those two stocks continue to be our top picks. And generally we are cautious on the names like Lanco, JSW Energy, And Adani is something that we are closely watching on. And, we would await the details on the FACs, etc. before we look forward to revise our numbers.
That is that on the entire power pack. But let's take the discussion forward. Partha Bhattacharya, who is the ex-chairman and MD at Coal India, joins us now on the phone line from New York to discuss the issue of Coal India signing FSAs in a time span of the next 48 hours. Mr. Bhattacharya, good morning. It is a presidential directive, sir. Many people do believe that it's a coercive measure of sorts telling, Coal India to fall in line. Do you agree with that assessment?
I don't really agree with that. There are a couple of reasons for issue of this directive that has come now. You see, I have always felt that the Power for All program is one of the most inclusive agenda of the government, and that cannot fructify unless fuel availability is ensured. The fact that Coal India has not been able to keep up the growth rate for the last 2 years have certain reasons which are beyond the control of the company. But somewhere it has to start. And to tell that Coal India must sign FSAs to the power capacities which has been already established, I think is a step in the right direction. But I'm quite sure that this is not going to stop here. Definitely government will issue appropriate directions to address the constraints which affect Coal India's capability to step up the production. You see, signing FSA per se is not the big issue. The big issue is what is the take or pay penalty clause. Now, I am not sure whether the presidential directive has spoken anything about the penalty clause. If the supply doesn't fructify, is Coal India required to pay penalty? If so, at what rates? That is what is the most crucial part, where the investors' interest would be there. In that case, investors would like to know how Coal India is going to meet the extra coal available. But I'm sure that government will not take a one-sided view. Government, if it has issued a directive today, it will also take such measures as are required to ensure that Coal India can address the constraints which are affecting Coal India's growth potential are also taken care of. And Coal India is also will be required to take decisions on overseas acquisition, on import of coal. These decisions have not been taken for a long time. The empowerment is already there. There is guidelines have been issued by the government for how to go ahead with overseas procurement.
Mr. Bhattacharya, the fact that independent directors have raised concerns about these FSA, and not without reason, you've also rightly pointed out that penalty clause is the big clause, but we are given to understand that penalty clause is something that CIL or Coal India will have complete freedom on. Do you think this is one interest that has largely been taken care of?
The entire interest has been taken care of. Then investors have nothing to worry. Rather, it is then a very positive step on the part of the government to issue the directive and give a little freedom to Coal India on deciding the penalty clause. The penalty clause should be linked to progressive dilution of the constraints that are affecting the company's capability to grow the production. And if that happens, it is good for everybody. I think the investors would like it.
Mr. Bhattacharya, so what is the message that you're sending to the investor community, that because it is a PSU, because this is a company largely held by the Government of India and has a majority stake there, it can, be arm-twisted in filing of FSAs? Because you are right when you say that interests have been taken care of, but look at it from a corporate governance point of view, this is coercion, nothing else.
Well, it is the company doesn't belong only to the investor, the minority investor. The company also belongs to the government. It belongs to the people of the country. So if a particular step is required to be taken in order to protect the interest of the people at large, which does not affect the interest of the minority investors, what is the issue? I mean, I think this is basically a win-win situation for everybody.